Alright, so if you don't know who I am, my name's TN, also known as Take Note. I trade institutional concepts mainly on US30 chart, but I do have a whole bunch of trading charts that I follow. What I'm going to do in this video, first of all, because today's Thursday when I'm recording this section of the video, just to start off, and that reminds me, if you find value in this content, hit the subscribe button. But what I'm going to do to start off the day is I'm going to analyze the chart so the rest of the video makes sense for you. Alright, so really quickly, US30 is trading in a range. This is the range that it's trading in. Within the range, we have a discount and premium zone. Discount basically means prices trading at a lower part of the range. So when you position at the low, you can target the highs from here and have a good risk to reward. A premium is the opposite. When you're trading at the high part of the range, if you take a trade from the high part of it to target the lows, you have a better risk to reward as well. So trading a discount and premium, trading a premium discount array. Within this premium discount array, we've got fair value gaps. The main fair value gap we've got is this one right here. We've also got a fair value gap at the top of the range here, and this is the premium discount. And then outside of the range, this is also still a part of the range, we've got this fair value gap right here. So what happened at the start of the year, or not at the start of February I should say, when tariffs started to kick in, we had a market structure shift down to target liquidity that was resting at the lows, which is right here. We know it's liquidity because it's a trend line sort of low setup without sweeping the low of this range. Here, market failed to sweep at the lows, so we know this is a build-up of liquidity. So we had a market structure shift here. This told us that price was going to try and target the low part of the range. Where was it going to target? It's going to target this area of liquidity that I just deleted, and then we came down and bounced into this fair value gap. So this is a discount part of the range. If you bought here, you would be aiming to target the premium part of the range, as long as we was able to recover and close inside the range and confirm the close. So what happened on Friday last week? We had the massive bounce. So on Friday we started to decide to target the highs of the range again, and I took a minor trade on Friday, which you'll see coming up next in the video. After this part, it begins to get very, very technical, and that's why I think it's extremely important that you watch this video to end, because I give a lot of gems on how institutions think. And we had FOMC this week. I'll show you how I maneuvered that. I'll show you how I was able to profit at a trade at the start of today, and this final trade should be putting me into passing the phase 1 of the challenge. So make sure you watch the video to the end, hit the subscribe button if you find value in the content, and let's get into it. Alright, so let's get straight into the trades that we took on, this funded next account, this 100k account that I recently purchased. On Friday, we managed to get into roughly a 1R trade. It wasn't a massive trade, it was more of a scalp. We was looking at price bouncing back into the range. We was targeting back into the range on the daily chart, because we've been trading in this range, and we broke out of the range. We came into a discount level back into the range. We was expecting price to bounce. So the target for the trade was a massive rally back into the premium. But seeing as this was the first trade of this funded account, I didn't want to go too heavy on holding the positions. My main objective for this funded account, for this evaluation stage, is obviously to pass as soon as possible. So the highest probability trade that I could see for this setup would have been a 1R trade to the high of the fair value gap, and that's what we took. This trade set up during the New York session. Obviously, I have a wide enough stop loss. As price approached the New York session, the open, we'd seen multiple green candle prints on the 4-hour chart. We ended up putting a position during the session. We ended up placing our order as close to the low of the range as possible, and once we were triggered, price ended up spiking lower. As soon as the market opened, we spiked low, but because of the beautiful stop loss that we used, 250 points, it didn't give us much fear or anything like that. So then price ended up just shooting up during the session, which was beautiful, and we was able to net roughly a 1.3R, about a 1.3R. So we're currently up on this account. The target for the account is obviously 8%. We've done 2% already, roughly 3% already. So we're going to be targeting, hopefully in the next week, we'll be targeting the 8%. And what I'm going to do, I'm going to update you when we find some more trades. But at the moment on this account, we've only got the one. Alright, so I'm back, guys. On this Monday morning, just updating you on one of the positions I'm just getting into. Obviously, you got to be agile in these markets. The market's pulled down into the fair value gap, and now we seem to be having a reversal. So once I've seen price sweep Asian session liquidity and hold, I've decided to position long, and that occurred during the London session. So because we're in a discount, because we're fairly deep into the discount, it makes a lot of sense to try and buy the market back up into the zone. At the very worst case scenario, I will be looking to exit the market if we fail to get back into the zone. But seeing that we're trading at a fairly deep discount, I'm happy to position within this fair value gap and try and retarget the zone once again. It's going to be an interesting trade. And I'll have to wait and see what happens. Obviously, we had a steep decline last week, one of the worst weeks in the US30 chart since 2023. So there's a chance we try and, make some of that back by having a rally back into the zone this week. I could be wrong, but due to the fact that it's a high probability setup, I'm happy and willing to take the trade. I'll catch you guys back up when the trade has played out to let you know how it's going, and I'll update you on the funded account as well. Alright, so welcome back, guys. Well, not welcome back to you, but welcome back to myself. I'm back at my work desk, or my work from home desk, I should say. I've managed to go to work today. As you can see, the time's changed to 11 PM, so I've managed to go to work, come back from work. I've gone to the gym, been really productive, and I'm just waiting for my trade to take profit. So we've had a really productive day. I've let the trade run. We've got really close to my take profit, but we haven't quite hit it. So what I'm going to do, let the trade run for another day, and we should hit TP tomorrow. This is the beauty of swing trading. I should pass my phase 1 tomorrow once we've been taken out once we hit my take profit. So we should hit TP tomorrow, then we'll start working on phase 2. So that's the beauty of swing trading. I don't spend much time in front of the charts at all. I didn't even really analyze much of the charts. I already knew that I was going to position in the fair value gap come Monday morning, just as long as we didn't go down aggressively. Obviously this area here, which is within the gap, when price attempted to go down after sweeping liquidity, this was the opportunity the market had to crash right here, and we didn't get that. So that's the reason why I started to look for long trades yesterday. We pulled back into our fair value gap in a major discount. So it's a really good opportunity for traders to try and position in the discount, and that's what I managed to do. So at the moment, I don't really need to risk much. I can take my risk off the table if I want to, but this is an evaluation challenge, so I want to try and hit my take profit as soon as possible. So at the moment, I'm risking 2% per trade, simply because I want to get through the evaluation as quick as possible, and I'm almost done with phase 1. Alright, so this is the funded next account. It took me a little while to pattern it, but I ended up sorting it out. This is the funded next account. It's got my name on there. I bought the account start date on the 14th, which is on Friday. I've taken 2 trades on the account, so I'll just go to the trade overview. It shouldn't, at the moment, it shows the running profit. This is the current trade I'm in, and it shows the trade I took on Friday as well. This current running trade, I haven't actually closed it out yet, so this is still running into profit, and as I said, it should close out tomorrow, Tuesday. At the moment, it's still Monday. So yeah, this is the equity for the account. 100% win rate, or 50% win rate, because this trade's still running. So 100% win rate in total. I've only taken 2 trades, and yeah, it's a steady straight up appreciation on the equity curve. Easy, simple. What I do intend to do with these funded accounts is I intend to scale to 1 million as soon as possible with full transparency, and that's the whole purpose of trying to get you guys to see what it looks like to trade a funded account using institutional concepts. And it's really not difficult, especially considering you get refunds once you pass and you get your payout. So yeah, I'm going to show you guys how it's really done. Alright, so we've still got quite a big move to make on US30, and if I just wanted to do a quick analysis of this chart, we've been trading in the zone. You guys have heard me say that multiple times now. Trading in the zone, we've finally been able to sweep liquidity at the low side, and now we're in a discount. We've bought the discount, so now we should be targeting a premium part of the range. So at the moment, I should be expecting a huge bear market rally. If we can hold into the zone, we should get above all of these levels and aim to target this liquidity level here. Now just draw a fair value gap, the one that we know that's here. We should target this fair value gap right here. Now once we target this fair value gap, once we hit this fair value gap and we sweep liquidity at the highs right here, it's going to be really interesting to see whether or not the markets are willing to go higher, or whether or not we're just going to crash from here. So this is the target we're aiming for over the medium term. So that's what I've got for the markets at the moment. I'll be back to update you guys tomorrow if we have any changes, and once we hit take profit. Alright, so welcome back, guys. Tuesday morning. I just wanted to update you guys on this trade. So I've decided to close out the trade. I closed it out for just over 1 hour profit. If you can see on this account, not the account, but on this chart, you can see that we failed to go above back into the range multiple times. So this is my first indication that, you know, we're probably not going to make it higher in price back into the range, so we can see continued bearish movement this week. My second reason for exiting this trade, this is something I want you guys to pay a lot of attention to as I mention it. My understanding of this came after years of experience trading the US30 chart and trading stock indexes. So we had a massive move yesterday on Monday, the first day of the week. We had about a 500-point move to the upside. And this rally, a whole bunch of retail investors and retail traders positioned into the market. Today being Tuesday, tomorrow I have to say we also have a major news event. So I don't want to be positioned into the market tomorrow during the news event. That being said, the massive market rally that we had yesterday most likely going to be swept by institutional investors, and this could provide us with the opportunity, or it might not provide us with the opportunity immediately, but this could be the opportunity for institutions to sell the market down. There's a concept that I want you guys to get familiar with. It's called the Tuesday sweep, and they don't teach a lot of people about this in any trading courses, but I just want you guys to have a quick understanding of what the Tuesday sweep is. The Tuesday sweep refers to when institutional investors allow retail investors to position long into the market early into the week on a Monday, and then what usually happens is on the Tuesday, price will get swept. So what that would mean, all of the retail traders who positioned long on this upward move, they will all be swept out. And what that sweep looks like is just a decline in price to take all of these traders out. Now, when price sweeps this market to the downside today, the question will be whether or not the sweep will provide us with the liquidity to rally higher. My guess is the price wants to continue going lower, and this sweep will not be bought up. This sweep will actually force price to go down so aggressively that we have a market structure, a continued market structure decline, and we're already in a downtrend. So this decline will be the retest of the range that forces price to decline. And all of this coincides mainly with the news event tomorrow and the Tuesday sweep that occurs today. So this is my main reasoning for exiting the trade. I don't wish to give back my profits. As I said already earlier in the video, the main purpose of my trade on Monday is to see whether or not we can get back into the range, and it seems like we're about to fail today. That being said, I could be wrong and price could be on its way back into the range and targeting premium levels. If that occurs and we do have a close back in the range today, I will look to position after the news event. But as for now, I'd much rather just wait it out, take my profits, secure my profits, and wait to see what happens with price action. But yeah, I'm gonna leave it there for now. Okay, so I just come back from work and do my end of day analysis. Obviously, I managed to trade effectively this morning before leaving. So I spoke earlier about targeting liquidity here. This is the Tuesday sweep that's taking place. As you can see, the market is really going against what my initial analysis was. From this current position, price should be targeting back into the range and aiming for a premium part of the range. We should be doing that. But at the moment, we seem to be holding the low of the overall trend, which is on the daily chart. So we seem to be holding the downtrend. That means that we're holding against this level right here, which is the low of the range. We all know this simple trade. It's a break and then a retest of the structure and a continuation lower. One thing I will say is there is no guarantee that this trade plays out. Tomorrow during the news event, my expectations is we will sweep this liquidity down here based on the Tuesday sweep, and I'm relatively confident that price will continue lower. My only question is, after we continue down and sweep liquidity, is it going to be a bullish outcome following the news event and the press conference? A lot of people who aren't aware of fundamental analysis, they will continue to trade the markets during the uncertainty of the news event that's going to take place tomorrow. Me, myself, I'm not willing to trade the news event, and therefore I was expected to exit my position either today or tomorrow morning prior to the news event regardless. So it's perfect I was able to exit at this position here, based on my experience of understanding how the Tuesday sweep occurs when you get a massive rally on a Monday, you should usually expect that rally to be swept, and I'm expecting price to target liquidity at the low before making a decision. My only question is tomorrow, will we see price, come back down to this low, sweep the liquidity, continue lower, forming a base at this low structure and bouncing off this base and continuing higher? That is also an option in order to try and target the high of this range again. That's one option. Or the second option is we just see the price continue lower, of price breaking out, obviously rebounding, targeting liquidity, and potentially bouncing off the high of the fair value gap before continuing lower. So we have two options tomorrow, and as an institutional investor, and that's how I perceive myself to be in, I do not want to be positioned during the uncertainty of the news event. The FOMC minutes release, and we also have summary of economic projections, which is very important due to the uncertainty going on in the markets right now. Institutional investors don't want to be in position prior. They want to wait for the news event, wait for everything to occur, and I am looking to potentially position on the Thursday or the Friday. If price comes back down, breaks the low and closes below on Wednesday, then we have a confirmed downtrend and I'll be targeting this liquidity. If price ends up breaking back into the range based on this scenario that I pointed out, price coming down, forming a bottom and then making a higher high here, and this higher high would be perfect. If we make a higher high right at this level, we have an opportunity to try and buy the market back up into the premium. So this is how I think as an institutional investor. This is how institutional investors look to position as well. They're very patient, they're very calculated, and I'm trying to be very patient and very calculated. Today was very good in regards to my trade management. I managed to exit the trade at this target level and avoid the 250 pip decline that occurred today. So after avoiding trading tomorrow, Thursday, I look to reposition. Hopefully, I don't want to try and predict the market. I'd rather react to the market. But if I was to give my bias, I'm expecting price to continue lower, only because the markets are extremely uncertain right now, and the Fed is in a bit of a rock and a hard place at the moment. So this is how institutional investors think. They tend to be very patient, and these are some of the characteristics you need to learn as a trader. And this is why I don't advocate for day trading as well, because if you're going to be a trader, you want to make sure that you make money when you're being calculated and not take any losses due to impulsive decisions. It doesn't take me a long time to make these, to create an understanding of what the market's doing on the chart, based on my experience in the markets. As I've said, I've been trading for quite some time now, so I'm starting to understand how the market moves, and I've got these key concepts like the Tuesday sweep that help me to understand certain aspects of the market, and things like that's only going to come with experience. But that being said, a lot of these moves in the market is going to require you to have the patience and the diligence to not be impulsive in your positions. If you say you're going to enter in a fair value gap, you need to enter within the fair value gap. If you say you're going to target the highs of a range, you need to target the highs of the range, but also know when to adjust. And that's what's important. Don't want to give up your profits. You want to make sure that you make good decisions that allow you to make money when you're trading. So I'm going to be back tomorrow, mainly just to analyze the markets post the FOMC conference. Alright, so FOMC conference is complete. We've had Jerome Powell speak, we've had the markets rally. Let's talk a little bit about it. Alright, so obviously after the news event, we had a huge rally to the upside. Price ended up rallying higher. We did not come back down and sweep liquidity, but we did have some major moves. So this is at 6 p.m. when the news event happened. We rallied right into this fair value gap and rejected off the fair value gap. This rejection is not a huge look. It's not a great look for the markets, unfortunately. Although we have re-entered the range, and although we did close back inside the range, unfortunately haven't got the necessary indications that the market's going higher. First of all, we swept liquidity at this high right here. We had a slight build up of liquidity, and we swept it. And then when price came into the range, we were unable to gather the momentum to go through it. So usually when price is trading in a discount and price rallies into a fair value gap that's in a discount, this should be further momentum for price to rally higher. So it should have just gone straight through it. Unfortunately, we didn't get that. We got a rejection. This rejection is indicating to me that this news event that took place today is actually a sell the rally event. So price rallied higher into the fair value gap, but now we've got a whole bunch of liquidity at the Tuesday sweep low that I was expecting us to target yesterday. We've got that all here to be taken. So there's a chance that the markets was just presenting an opportunity for buyers to get in, only for them to be swept. So what I'm going to be doing, I'm actually going to just monitor the market tomorrow and monitor the market on Friday. If tomorrow remains bullish and we've just opened for the futures market, if we can get another bullish move into Thursday, hopefully price would indicate to me that, you know, we're going higher, that this level of liquidity means nothing, and it's not really, you know, it doesn't mean anything here. Maybe it's not a valid level of liquidity or something, but at this current moment in time, I believe that we're still going to target this level of liquidity on Thursday or Friday, maybe not in one day, but maybe in a couple of days. So what I believe is taking place now is this is just an inducement rally to get people to buy the market, for institutions to be able to now sell the market down. And what that's going to look like is going to be some sort of red candle like this. This red candle is going to confirm the downtrend, and then price is going to print a further red candle to take us back down, sweep liquidity, and continue lower. Obviously, ideally, the best scenario for this situation would have been there would have been no news event, and I would have just held my position into a rally into the premium zone of the market. But unfortunately, we had news, and news usually dictates the markets. The fundamentals usually dictate the market. So I have to give a lot of, you know, credence to the news that's just happened. One last thing I want to speak about before I go, because after today, I'm probably not going to be back till Friday. I might do a slight analysis on Thursday to see what happened. But the main thing about this week is you need to remember we're printing red candles and we're going down. So this candle being green is an outlier, so you cannot prioritize the buys at the moment. If we're in a downtrend on the weekly chart, we should expect further downwards movement until proven otherwise. So if by Friday, I mean, we're still printing green candles, then the week would close green, and then I would have more confirmation that maybe this is the rally that we've been expecting. But at this current moment in time, I cannot say that. As I said already, we've got liquidity that hasn't yet been swept down here, and we've also got these trend line levels of liquidity that's building up. So this market is poised to go down. We've seen the rejection of this fair value gap. All we need now is for price to get back out of the range, and once we're out of the range, it should fall fairly easily down to our targets. So my method for re-entering this market, ideally I want to get into the market at a fair value gap, and I think I'll be happy to get into the market potentially a rejection of this fair value gap. So let's say we go down from here and we reject, I would look to enter the market here in this level with my risk above this level, 250 points risk, and I would be targeting at minimum liquidity at the lows. But we've still got a lot to do before we can get there, so that's what I'm looking at the moment. I'm going to call it quits for now. I'll see you guys back on Thursday. Okay, so Thursday morning, literally just positioned into this trade a couple of hours at the open of the London session. As I mentioned earlier, we're targeting liquidity at the lows. We've got liquidity resting here, and we've got liquidity resting here as well. So the way I positioned to this trade was we got a sweep of Asian session highs inside our fair value gap. Doesn't get any more clearer than that. And now we're targeting liquidity at these low levels here and here. That's clear on this account. Current running profit on this trade, I risked I didn't risk 2% on this trade, I risked 1%. So current running profit is up about 1% on this trade at the moment, and I need about 2.5% to pass this challenge. So yeah, just gonna let this trade run and play out. At the moment it's 12 p.m. We're entering pre-New York session, so should see some movement. Once price gets below this level, we should literally fall off a cliff. But the moment I entered, price pretty much did fall off a cliff anyway, which was pretty nice. Yeah, I'm about to start getting ready to step out, so I'll leave it at that. I'll continue my analysis when I get back in. If price does decline from here, this is going to be a perfect entry for the highs of the week, and price should decline aggressively. There's also a chance we close slightly green on a doji as well, and if that happens next week, could also be the waterfall moment, we fall off the cliff. So yeah, see you guys later on. Alright, so I'm back from work. It's Friday, market closed about an hour ago. Just completed my end of week analysis, and yeah, we finally had our drop to the low side. Took me out at take profit, or I closed it manually, but yeah, we had our decline that I was looking at from this fair value gap, and we fell right into liquidity that I mentioned was resting right here. So yeah, it was a good trade, easy 2.67R as seen on here, and I've managed to successfully pass this challenge with 100% win rate successfully. 100% longs, 100% shorts one. Not really much drawdown. It's literally a steady increased up, and I only traded US30 on this. So as you can see, like when you're trading institutional concepts, you're trading around the news. You know, you're using key concepts like the Tuesday sweep, which obviously we didn't manage to get down to the lows that was put in on Tuesday, which was down here. We didn't manage to do that, so it's actually going to be interesting. I think some news came out from Trump which caused markets to rally after, but we did still manage to sweep some of the liquidity. So there's a chance that, you know, this is just liquidity that's building up further along here, still probably likely to come down and sweep this low level. But what I'm going to do, obviously in my phase 2 part of the challenge, I'm going to just wait and allow the data to be a bit more clearer. So because we rallied and stayed within the range, there is a chance that we've hit the discount, and now if we get a rally through here on Monday, maybe we might end up targeting the premium again. So I'm going to be a bit more patient with this one. It seems like we are confirming the uptrend, so I'm going to update you guys with that next week. But yeah, this is how I'm able to trade these markets. I'm patient with my entries, you know, and I don't try to overcomplicate. I just stick to swing trading, target 1R and 2R, and be extremely patient. Just another look at the account. I took roughly about 3 trades. I think one of them, this one doesn't count. This one was an entry that I wanted to get into on Tuesday prior to understanding the Tuesday sweep, and then I just ended up closing it out at break even. After I thought a bit more about why the market was declining, so probably shouldn't have entered this one. But in regards to these 3 trades, they're all simple trades. This was a half my risk, so I risked 1% on this one, risked 2% on this one, risked 2% on this one, and just like that, 8% made in just a few days. I'll show you again, just 4 trading days, so I haven't actually passed the challenge. I need to enter a minor position on Monday, and then phase 1 will officially be passed. But yeah, I really recommend people start looking into swing trading, especially if you want to get into these funded accounts. You don't need to stress yourself in regards to, you know, day trading, missing entries, fucking up your psychology, excuse my language, and so on and so forth. You've seen that this week of trading for me has been extremely cautious but very analytical. What I see on the charts is what I look to position into. If I'm trading in the range, I aim to trade in the range. And also, yeah, this fair value gap is still a part of the range as well. So I'm gonna do another video, release it by the end of the weekend on my analysis for next week. I'm probably sure you can guess what I'm gonna say in the trade, in the analysis as well. But I do recommend you guys, if you want more videos like this, definitely leave a comment in the comment section, just letting me know you like the video, and yeah, hit the subscribe button as well to get notified. But yeah, it's me on Take Note. If you don't know why they call me Take Note, just take a look at this. But yeah, I'll catch you in the next video.